Good morning, everyone. And here we are, daily plan on FOMC day and VIXPERation day. And we'll kind of get a little bit into VIXPERation nuances as well if there's time. And after I do my little walkthrough like I usually do, I'll kind of do an abbreviated version. And I'll introduce Julie Wade, who's here, and she'll talk a little bit about what she does. We've been kind of communicating back and forth and talking and sharing screens and ideas. And she's got a very interesting, robust, algo driven, she'll describe it better than me. And she's just going to, preview a little bit of it and how to use it and what the plan is derived from that. And then we're going to come up with some sort of joint idea at some point, hopefully sooner rather than later. But anyway, on to the business at hand. Okay, so you can see we're basically flat. We pulled back to 6,600 a few times, recently, the last half hour. Not sure what this was. I was sleeping what this blip was. Maybe a headline, maybe whatever. It's really kind of inconsequential. And so here's sort of the roadmap, and this is given to my subscribers, my little TV string. And I want to say beforehand, grain of salt on these levels today. Because the profile is kind of thin, the structure is kind of thin, and with all the volatility priced into the event, and then that's going to come out after the event, and then whatever actual real money buying, selling, algos figuring stuff out, and then press conference comes, a lot of this stuff can easily get overrun, especially on the 0DTE, but we're going to talk through that. Okay, so let me go to the options depth and just kind of talk us through some of the key positioning. Okay, so this big line, the biggest line on the chart in this 0DTE is 56.90. That's a good chunk of that is quote unquote the other side of a 6,000, roughly at the money, 56.90 put debit spread, but the reason it's not equal is because people have also sold puts. Not everybody, it's not like this person who bought this is the only person on the planet Earth that has a 6,600 put interest for today. And so it's unbalanced here in the market maker's book, which kind of favors it not breaking so much because mean revert down, come back up. So conceptually, think of it as a, hey, Boomer. Oh, so we have a Julie Wade fan. Conceptually, think of it as a 56.90, 56.10, 6,000 fly, and we can just kind of mill around here, and you can scalp this stuff, and Julie might have a lot more nuanced levels to scalp within this area. On the old if-then side, if we should break below this and the volatility increases, I don't expect volatility to increase that much. I didn't look at what VIX is. We'll go around to that in a minute. Now with VIXPERation, we could get a VIX go up to 18. Now remember, VIX is priced against the October contract, and the October contract is priced at 18. So you have to kind of keep that in mind when you see VIX rather than the current VIX of 16 that's expiring. So kind of keep that in the back of your mind here. So if you bought an at-the-money VIX call, let's just say for October, it's about $3 or something, you would need a VIX of 21 for that and in October. And I think that's a little rich. But we'll have a post on that or a discussion on that later on. No, I mean, not today. Okay, so if we should break below 56.90 at some point, then we have a little inflection point at 75 and 60. 56.60 is kind of the next level down, and so we can just kind of see that. I'm just explaining where they come from. We can see that on the chart here. Here's a put debit spread brace. We kind of drift and pin right in here. Should we break below here? There's really nothing down to the quarter strike. And then bottom of the chop zone, et cetera, and we keep going down. Round number support, and we kind of keep going down. Extremes. 65, 90, 50, whatever. What's 1,000 points among friends? Come on. If we're going to quibble for 1,000 points, yeah, if we're going to quibble for 1,000 points, oh, so where am I? Yeah, yes. So the 6,590 level. 300, right there you go. Exactly. Yeah, 6,300 basis point cut, and to hide in your bunker would do it. Also, if we want to look at it in a different roadmap, let's just say things are bullish, it goes as expected, and there's no tape bombs, whatever, other than the usual. Another way to look at this structure, as I'm looking at it here, we have a big ass fly, technical term, between 65.90, 66.75, with a mid somewhere 66.50. So this becomes a natural chop zone with little ping pongs at 10 and at 66.50 with kind of a 66.35, take out the all-time high-ish a little bit, possibility as well. Another grain of salt, and I'm going to bring Julie up in a minute, another grain of salt mention is two things I have to mention. One, and I'll repeat, there's not a lot of contracts here. There's, what is it, 900 calls. Somebody puts in an order. I know Gamma Edge routinely puts in 5,000 contracts orders, just each of the founders. So when an order comes in to buy 1,000 call debit spreads or put debit spreads, that just swamps all this. And so that's what's here locally now. That will likely change. People aren't really taking big bets before the FOMC. Now, what will be controlling the show, and for this, let me go to depth view to show it here. What will be controlling the show is this. The SEPT Q3 options are big and chunky and close. And so we look here and we see we got customer long calls all the way up at 6,700. Extreme crazy, maybe not today, but it's there. We have 66.50 round number as we have a stall today, but this is there too. And just kind of looking, look at the big reds and green numbers. 6,600, market maker short, magnet, hedge in this direction. The 90s have a little bit of stuff here. The 65.90s, not the 56.90s, y'all. Then we go, we don't have a lot between 6,500. Then we get down to the round numbers, the 50s. 6,500 is sold. Why? We have JP Morgan over here at the end of the month. We have lots of market maker long down here at 6,500. It's going to be hard to break that. And we have more sold stuff underneath it. So this is going to influence today, but broadly speaking, there's just not a lot here. Don't torture the data, as the founder over here likes to say, and I think it's a beautiful statement. Don't torture the data. The data says we don't really have enough data. We can make some assumptions, but we don't have enough data based on gamma. However, Julie has other metrics she throws in that's not only gamma. And with that as a elegant segue, I'm going to turn the mic over to Julie. And when you want to screen share, whatever, just, let me know. I'll put it on the charts.
Okay, great. Good morning, everyone. I think I got the screen share to work.
Yes, you did.
So the first thing we have to recognize is, we're coming into this quarterly roll on Friday. And so we've got the futures have already moved over to the December contract. However, the which is at 66.67 right now, but the September is the one that's tied to the options. The options have not changed yet. They won't change into the roll. So we need to be basing, our minds back on the September contract for ES, and which is at 66.10. And so all of my reports through, today, tomorrow will be still on the September to match the option data. So just it gets confusing at this time of the month or quarter. So what can we talk about today? The daily range and the fact that it's going to be a surprise, most likely to many, that it's going to be flat going into the end of the quarter. They've already priced in the move, right? Everybody's anticipating the cut. It's very, unlikely that he's going to announce a 50 basis point cut. So everything has already been priced in. There's no reason with the option metrics that I've been able to analyze today that there's going to be a big move. The dealers have positioned themselves neutral. So if that helps you position, you can, anticipate, staying within the daily threes.
Can you
And
explain to them what the daily threes mean?
it's Sigma, and it's a variance trading model. The CBOE in September of 2003 changed from your Black-Scholes at the money um, pricing model for VIX to the variance trading model. Not many people realize that. And so they're using, they're going from the at the money out 1 sigma, 2 sigma, 3 sigma. And then you go into tails outside of 3. So 3 is really the 97, 99% of the range. So 1 is 34%, 2, 68%, 3, 95, 97. And so I can go and match these levels, and I color code it white or the ones. I'm able to get different levels measuring the open and close. Like yesterday, there was a spread between the open and close, and you can see that's exactly where the market pinned itself. The threes are orange, but I also calculate 1 period and 14 period, 1 period being the realized volatility, And that is my yellow line right here in the histogram. So you can see what the actual the point range is on the right side of this. So you can see the actual points, right? So 1 is white, 2 is blue, 2 is 68%, 1 is 34%, and 3 is that 95, 97%. So I try to color code everything for you. Um, the dots on my chart are RVol, and the
So
side
RVOR means
one
historical
period.
realized volatility.
It's realized, meaning one period. It's the actual high to low point range for the day. That's all it is. It's actually what the one period range is for the day or whatever time period I'm measuring. I can do a one period on a weekly time period, which I measure as the number of trade days in the week, or you can have one period of 7 days, or one period of 5 days, or 3 days. So you can do a term structure 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, just like they do with the options, but with realized volatility as well as historical volatility. And so you can put these together and see the point range, how far the daily range goes. Like on an average, you can see in the VIX, um, these vol spikes can get to these standard levels. This is not ATR. People often confuse it with that.
Yeah, when you
Uh,
first explained it to me, I thought it was ATR2
yeah,
until you
exactly. It's
explained it. Yeah.
similar. They're both variance systems, so it is similar. If it were ATR, we'd all be in great shape because we'd all be able to make the same money and, do the same moves. But I use something different. And But the concept is when the realized volatility, that R ball, the one period, moves outside the daily structure, like right here,
Hmm.
that's your hedge. That's when you need to be hedging. When it's inside the range or at a low, and low relative period, you could literally see here what those point ranges are. And so you'll know whether or not you need to hedge
Quick question.
or fade it, because once it gets to this level, they're going to hit it back in. Yeah.
So I have a quick question for you. So, being a kind of contrarian at heart, the story of my life. When we get that spike outside of the, when realized way exceeds implied, how often or when can we go counter that to expect a reversion back in, or at least toward, if not back in?
Well, it depends on the dealer positioning
Right.
itself
Okay. Good
and
answer.
then and the momentum. Yes. So
Good
that's
answer.
why I analyzed the option metrics for that. And that's
So,
exactly because I have a lot of levels. I can tell you precisely where that 2 and 3 sigma are. That's no problem. I mean, I do that extremely well. I can show you the delta neutral very, very well on all time frames.
and so correct me if I'm wrong. So I think that what you're saying might be something like, okay, we exceed the realized volatility, the implied realize it exceeds implied. But if I know that there's a large market maker, short customer, long put strike lurking nearby, we might keep on going or stay
Well,
there
and that's
versus if
I
there's something
and
else.
and I need to interject here. I mean, I realize that you guys are always, so focused on the volume, and a lot of the times you get away with it, but a lot of the times you don't. And the reason I'm cautioning you on only looking at that is because you can't see the dealer volume. They're hidden, as well as the large institutional players. The people that can move the market, you don't see their orders. So when I say the dealer, I mean like the institutional banks, hedge funds. Um, you don't see their order flow or the block trading firms and sometimes you don't even see it to the end of the day when they publish the volume at the end of the day. But You definitely don't see it at the time the trade's executed. So I, I hesitate using volume in that manner. Now, when you do see a large volume block come in, sometimes it just churns. It doesn't even work. So you see volume, but it's not going to do anything, especially if the dealer's pending a level. It'll be like that. I'll sometimes throw up a picture on Twitter of a guy on a motorcycle trying to climb a tree, and it just flips right back on him. You can put a lot of volume on something, but it's not going to go anywhere if they're pinning it. Like right here, the weekly one. Why did they pin the weekly one? That's their cheap risk. That's delta neutral inside the ones. And so your middle of that would be the mean. And so you can see here how the different time frames come into play. This is a 7-day one versus the current weekly one, the number of trade days in the session. And you can see how instead of the mean being in the middle, they're using the 7-day as the mean. You see that?
Yeah.
So
Okay, we
so
have
when
two questions for you.
oh, okay.
Okay, I'm putting them on the screen. I'll read them to you, then you can answer
Yeah,
them.
I'm not
One, somebody asked if it updates intraday, and the next question, you can kind of take them in series if you want. Bottom line trading feature on ES, does it tell me where to enter a trade long or short? So we have two very practical, pragmatic, how to,
Mhm.
kind of questions.
Right. You can get the indicator for NinjaTrader. They're a excellent futures broker, and they're going to be offering when the CME brings us the single options on futures. Um, they're going to be offering that as well. So we'll be able to get option levels for the futures contracts, and hopefully that's going to be in the near future. You can and it updates. You can get a license for. I'm an authorized um, third-party vendor for the NinjaTrader platform, and it is available. You can get this for the NinjaTrader platform for subscription, and it updates live.
So
And
when you're screen sharing whatever during the day to your subscribers, is it updating intraday?
yes,
Yeah,
yes,
okay. That I
and
think that was the question. Yeah,
right.
that was
Oh,
the
yes,
question.
absolutely. It's live. And in fact, my market analyzers update live as well.
Okay.
So I can
Next,
put all the market levels on one screen like this. You could be
right,
monitoring it and it will update itself
right.
also.
You have more information than you can process. Gotcha. Then you
There's
can
there's
mentally
a ton.
process.
Yeah, yeah, yeah. There's a lot to it. Now the second part to his question was how would he know where to come in?
Yeah, yeah, yeah.
Because
Bottom
there's
line
there's
trading. Yeah.
there's quarterly levels, there's monthly levels, there's weekly levels. Which one do you know, to come in? There's realized volatility, there's historical volatility, and that is a $64 million question. That's why I went to the options and to rely on your guys' expertise. I'm sort of new learning options, especially compared to most of you. Um, but combining the real volatility and historical with the options is the answer because you want to know what the dealer flow is going to be. So I've spent a year working on my options analytics and got to a really good. I make my own indicators out of the options flow to do exactly that. I wanted to put the momentum and my algorithms for options data that I can get um, together in my own structured manner to show pinning, expansion, or contraction to match my um, volatility indicator. Everything I have built is based on JATS PT framework. So that it starts, number one, the framework starts with JATS PT, and then it branches out to the options to support the JATS PT.
So
And
the basic guts, the framework is more volatility, realized vol kind of based. Is that a correct statement?
It's based on JATS, and then we apply the options to that. So I can see the entire option chain and note what the significant key support resistance my I'm doing something much more sophisticated than what y'all have been looking at. So y'all have been focusing on, volume at gamma and open interest pretty much. I go much deeper than that, but well, I bring those option levels into my volatility levels. Yes, sir. So, but anything that would stand out, like if it's not on my volatility level, I still will make note of it if it's significant. But I can guarantee you that the volume is not going to show you a lot of what you need to know, which are the JATS levels, especially when you come in to a big time period like this quarterly roll. You want to be looking at these quarterly levels. Um, this is the December. Let me put this on the September one real quick so that you can see it. Um, and so you can see here we're right in the middle. They've put us right in the middle of the September range. So they've taken that out of the equation, but here you can see we're at the top of the monthly one. That is their risk line. They have not spent any money on calls up there yet. So if that gives you a clue, and you understand ones, right? You understand that they're going to be not wanting to move their risk out yet. So they haven't done so yet. Would this Powell statement cause them to move risk out any further? And if your answer is no, the market has already baked in that 25 basis point cut. Just knowing that the monthly one for JATS is sitting right there, that should help you. Do you get that? No,
Yeah, we
and
have
so
some theoretical fine points that we can discuss off screen, but yeah.
so 66.15, 66.10 are my monthly levels. So
And
that
and that's where I came up on my daily plan too,
yeah,
with my way. So we end up, all
yeah.
roads lead to Rome.
And we're at a 2-point BTIC spread today between SPX and ES. Y'all do the basis trade index close. So it's very
Yeah, the
small.
B-Tech, right.
VTIC is like 2 points today. So we're going to be lockstep between ES and SPX today, which is going to be helpful.
Okay, we got two more questions, and I want to go on to VIXPERY in a minute. Okay, so one question is a pretty simple one. What is your indicator name? And the other one is, so barring heavy buying flow, dealers will pin at or below, question mark?
Okay, what was that question, honey?
Okay, so the first question was the
Yeah,
indicator name, and then the next one is, it's on the screen if you, I don't know if you can see it. Barring heavy buying flow, dealers will pin at or below, question mark?
barring heavy buying flow, dealers will pin at or below monthly. Okay, think of, I just was sitting here telling you it's the monthly sigma levels because here we are mid-month. The dealer is, neutral today. There's no bias for longs, right? Or shorts. They're dead bang flat going into this report, and they have not moved risk off of that monthly 1-2 combination. I've got a RVOL 2 sitting there also, or a 30-day. And so it's an RVOL, 30-day one or two, 30-day two with a monthly one. That's a strong resistance zone. And so the dealers, you see that rejection coming back in. Dealers have not moved risk back out. It's a monthly level. If price gets above that 66.20 on the September ES contract,
We'll call it the intraday all-time high, whatever that was.
yeah, well, 66.20, forget the high. I
All
mean,
right.
if it gets above 66.20, they're going to have to hedge or
They're gonna
move
have to
risk
buy
out.
into the move, yeah.
They're going to have to buy into it. And I'm telling you, there's nothing on today's report that says that they're going to do that. You see what I'm saying? If that's what you can look at my report, my poor my indicator is called JATS PT. JATS, J Auto Trading Strategies. J is for Julie. Hi, that's me. I was a secretary paralegal my whole life. I never did anything like this. And then back in 2012, I got laid off like everybody else, right? In the financial crisis, the firms imploded. And so I, you know, picked up the I'm the woman towel. And my mentor, I got accepted in the Houston Technology Incubator. Um, really happy that that happened. I got a year of mentorship from some very high level tech people in the Houston area, and got mentored through not Rice, but University of Houston Small Business Administration. We went to Rice a lot for their business plan competitions and things like that. But my mentor was trading, and he was trading the Greece euro
Okay.
when it was falling apart. And so that got me interested in it. And I started, you know, I found NinjaTrader, went through the whole, tear everything apart, look at everything. And then I realized that I was going to have to start from scratch because nothing worked that I liked. And I just started building my own stuff.
Okay.
And that
So this has been
since
more than a
20,
decade long
about, yeah,
evolution.
evolution. And then this last year is when I wanted to put options on it. And so I've been learning about the options, and the framework is complex. There's a training document on here. You can go to my Substack and look at this training document, and I tell you about all the metrics and how they
Yeah,
work
I've read through that a
together.
few times. Yeah.
And so I can't give you my calculations because they're proprietary, but everything I've done is I've created myself. There was nothing like this anybody's created. This is all original, and everything I do is my own stuff, including my indicator. And I put these things together to make it so that I could see the dealer positioning, so that I could understand exactly why the market works in the way it does. Here's the framework. Starts with my JATS PT levels. Number one, you want the volatility. You want to know where that monthly one is, or the monthly two. Then I move into the specific flow metrics in this specific manner to calculate
Kind of
the
like a
filter.
decision tree or a
It is
filter,
a
so to
decision.
speak.
It is a filtered decision tree. And then here, I just posted it today, so it would be helpful for you to understand. I put some of the components here so that you can see the pillars, the net gex and the gamma flip and the momentum. You need to know whether that is going to be able to expand or, break out for the pin zone and where that pin zone is going to be. So it's sort of like we are all given either the straddle range or my daily range, but you want to know what the compressed inner structure, the, I guess you could say the at the money, um, you know, 20 delta on each side, or like maybe that's 35 delta on each side, or whatever I don't use deltas like y'all do. Um, I got to tell you that right now. I'm not using market maker levels or anything like that. What I've done is a little bit more sophisticated, because if we all use the same generic, I'm going to use a 20 delta or whatever, you're not, that's crazy. Think about that. That's just not going to work. You want to know what the actual inner core is and what that straddle range or my daily range is. And then you want to know if there's any monthly, quarterly levels that are going to interplay in that. And I think that's where I've really been helpful, because I can tell you to stop focusing on all of those other levels. Don't worry about the quarterly today, or don't worry about the monthly today. Today, we're only going to be focused on this one weekly, or because I will only focus on what's inside my daily range. I'll discount all these other levels that we don't need to see.
Okay.
So
Very cool.
and then I bring the options on top of it to find out if it's going to break, fade, or pin. Yeah, it's
Okay.
it has been a great exercise, and I can't wait to automate it. I want this
And
on a
so,
platform. Yeah, I'm
and
on.
so Julie and I are going to be doing something together. We're still kind of figuring out exactly what
Mhm.
and how.
Yeah, see this VIX range? You're right in the middle of the monthly VIX. It went right to my mean, 1661, and installed, waiting for Powell. My other, when we pop it up out of here, I can tell you that the GEX for VIX went positive. I just wanted to check that today. Haven't seen it. There's a new website I'm going to introduce to you guys later. It's being finalized today, this week. They've been working on it all year. Hang on a second. The VIX should be going positive next week. And what does that mean? That means that the GEX for next week, yep, it's positive. It goes from 16 to 22, 16 to 20 really. When it anything over 16 next week is going to be we've been in negative GEX forever. And when it flips positive just for these brief periods of time, that means, the dealer's going to be long vol. And when the dealer's long vol, what does that do to your SPX?
Down goes Fraser.
It usually sends it lower, yeah. So that could be another clue why you don't see the dealer moving risk out on these monthly ones. Why would they move risk out if they're expecting long vol next week, right? It's going to be coming back to the middle of these ranges or lower.
Okay.
All right, guys, I'm going to have to run. But yes, I'm looking forward to doing this with you and getting your expertise and finding out how you can help me.
Okay. And how we can help
Each
people make
other.
money.
And absolutely come up with the actionable levels, come up with reasoning behind it, and make it succinct so that you're not reading a Magna Carta.
Exactly. Exactly. You and I could do the Magna Cartas in the background, but then people want to say, okay,
Just
what do I do?
yeah,
Right.
exactly. Forget all that. I want to know
Right.
what to do. Yeah.
Right. Okay. So I'm going to switch now to talk about VIX real quick, since that was a perfect segue. So what's going on here today, right now, expiring today, and Julie touched on it. I'm going to touch on it from a slightly different angle. Maybe it's the same angle with slightly different verbiage. You see the 16 level here?
Yes.
Customers are short 16 puts in the VIX off of a 18 by 16 1 by 2 trade. Big customer trades came in long the 18 um, SPX VIX put, short the 16. What that means to normal people is that we pin at 16, give or take, a couple pennies. Um, and that's kind of what happened. We kind of saw this coming. I'm pretty sure Julie, it sounds like Julie saw it coming too. So what happens now? Well, what happens now is that goes bye-bye. And when that goes bye-bye, we kind of have a path up to 18, 19, pretty clean before something starts to happen. Do you see something like that? Just, broadly?
Well, 16 is the pen, right?
Right. So
Because
so that
15
goes
and
away. That goes
was
away
that
at
it,
9:30.
it's yeah, the pen though. You're saying that the option position goes away?
Yeah, yeah, yeah. We have VIX expiration. That all goes bye-bye. Then this is what we have to deal with.
Well, the you're talking about the expiration, but there is still uh, all day long 16.5. Um,
But that goes away. They're not hedging that anymore after this. They're hedging they're hedging the October and the small weeklies, which are really, nothing burgers.
Hmm. Well, 16 turns positive next week, and there's nothing underneath it. There's no negative. It's very small. There's no GEX when I say
Yeah, yeah,
underneath.
yeah. There's really no GEX
No GEX in
until the October
October.
monthly.
But for next week, so that's what I'm saying for today on the expiration that you're saying is very light, and 16 is going to be it. They're going to keep the market on the other side of 16. So I'm just letting you know that 1574, 1578 are probably the lowest it will go today because those are the daily twos. And my daily ones are sitting right there at 1606 and 1610. So more than likely it'll bounce. You see how it came up to the daily one precisely and came back
Let
in?
me, hold on. Let me put you back on the screen. Okay.
Can you see my screen?
Yeah, I put it back on.
Okay. The daily one, the VIX came up to the 1674 and then is coming back down to test. And so my lower daily one is at 1606 to 1610 and 1618. The two, this is the R-vol at 1594, could get that wick and pop back up. But if it stalls out in here, 1574 to 1606, that would mean that the market is indecisive. Maybe you had a Goldilocks Powell where he decides to be actually supportive of the market. But, that's not going to happen, right? So, I don't know what to say. I can tell you 1594, 1574 at the low end, but 1606 probably or higher is my guess, and then we go lower after this. But I have to run, so
Okay.
I appreciate you so much. I'm really looking forward to working with you and putting together hopefully something like you say, concise, short, sweet, sweet emphasis on the sweet. Get the sweet spots, and because you're so pleasant to be around,
Oh, thank you.
Yeah. All right. So we'll chat soon. Hopefully, I'll definitely get me with me later so I can give you my phone number.
Yeah, yeah, yeah. Well, we'll exchange more detailed information and kind of figure out what we need to figure out next.
All
Okay,
right.
Julie, thanks for
Thank,
dropping in.
thank you. All right. Talk to you later.
Okay. Okay, yeah, so Slayer, let me see what Slayer has to say. Um, I've been told you get on stage as well, but thinking how to add NQ trend. Yes, all that's true. So yes, all that's true. Short version. Yes, I am. Dr. Goat, thank you. I've been doing this for a minute, and now I have goats. I didn't start all. I used to be the goat without goats, but I moved. Thank you, guys. I appreciate that. Like, retweet, resubscribe, all that stuff. Vote early, vote often. Um, so yeah, so yes, I live stream all day pretty much. Maybe, even when I take a break, I live stream, but sometimes it drops the stream, whatever. And you get my running babbling, and people can jump in and talk and all that. And it takes a village. So getting back to my take on the VIX from my point of view, right here is market maker long, customer short at 16. We pinned here, no big shock. We have the SOQ, which is settled by an arcane method where basically between 9 and 9:10 dealers, we won't go into the math of it. Like I said, it's arcane, but basically um, futures people and SPX market makers look at the bid ask spread and the mid prices, and they kind of like make a bid. Okay, we think it's going to be here. We think it's going to be here. Through the magic of math and algos, they come up with a number, and that's the settlement price. So we'll get a settlement price for VIX at around 1 minute to 10 minutes sometimes after the open. It'll come out instantly to them, but we won't know what it is. And so you're often going to get crazy VIX moves in that first half hour because the settlement price is going to be based partially on bid-ask spreads of the SPX options, including out of the money strips. And so if there's some out of the money SPX put, I'll just make up a number at 6,000 or 6,000, 65, 90, 60, 56 at 6,005 with a bid of $1 and ask of $8, you're going to get wonky averages. And it takes a while. Then when people actually come in and bid those, then it kind of levels itself out. Okay, yeah, so Julie left already. Thank you, kind of a legend. That's nice. Uh, and so what's going to happen once this goes bye-bye and customers are going to be rolling, and they did a little bit yesterday, we have to go over here. And I'm going to have options data. I have it somewhere. I have to dig it up um, for what the October looks like. And it doesn't look like the September did. But don't get it twisted. A lot of these are short. People aren't long all these options. People didn't buy all these VIX options. There's lots of 1x2s and all kinds of interesting structures here. Not that people bought these 35s. They're not that crazy. There might be a few like tail hedge funds that buy this crazy stuff, but in general, a lot of this is sold, and you kind of have to analyze the VIX complex the same way you do the SPX complex, and the two are going to interact. But that's a whole nother story, and that's kind of going on, underneath the hood. Now, as I said before, since I'm on this VIX thing right now, I'm just kind of following my stream of consciousness. And what did I want to say? Okay, so remember that VIX is priced off of the October contract. So what do I mean by that? Let's go to VIX. When we see VIX, the VIX 18, and the October VIX is roughly 18, the VX. So if you bought this call, and just pretend you bought it and held it to expiration, you're a hedge fund, whatever, we would need a VIX of 20 in October for that to work. Well, maybe it will, maybe it won't, but it's kind of a little bit expensive. Now, I'm not putting on a trade right now, but what might make sense is just off the top of my head, very off the top of my head, might be something like, and I'll build it out a little bit more later. Does that make sense? I don't know. 18 to 22 is 4. I'm willing to take a little risk. Something like that for 96 cents credit. That's not bad. I can get out of the risk zone to over here for credit. So I can get 18, let's go 18 to 24. Hold on. All right, it got screwed up. This actually looks interesting. I might do something like this. Let's just go here for starters. Let's sell the 24s. Let's buy the 18s. That's a debit. But I got 6 to the good. I got 4 to the bad. I'm willing to do that. And I got to buy another one of these. That's just tiny debit. So I might, look at something like this for a small credit. So I would play around with the Frankenstein fly. I'd probably, knowing me, because I kind of will take riskier positions, I might do something like something real wide on top and try and get it for a credit. Anyway, I'm just playing right now. This is not a trade idea. I'm just kind of thinking out loud with that. And for today, what do I have? I don't have anything today. FOMC is a no trade day for me. I guess have this IC that I put on last Friday based on this, based on the expected move. And here's the expected move from last Friday, measured last Friday, 6,500 bottom, JP Morgan level, 66.69 top. Let's go back to Gamma Land. Let's go back to table view. And so 6,600 and the month, we have some stuff to pull us up to 66.50. We do have, like I pointed out, if Powell says the right thing, 6,700, although a stretch, if you think about it, what is it, 1%-ish, not crazy on a Fed move. After that, likely stall, and then remember this decays down. If it's a little bit out of the money, then these options lose their delta quickly. Let me just expand the range a little bit here. Life is getting crazy. We need to go to 66, 67, 60 on top. Why not? And what's going on up here? 6,700. Above 6,700, stuff is thin. And that's it. So 6,500 is JP Morgan. That's basically it. I'm going to be scalping today. Today is a no iron conduit day. I have a small debit spread for tomorrow, 6,600, 65.90. I took tomorrow's expiration, but I'll probably monetize it today. Is it a predictable feature on VIXPERY if there's a spike before bid-ask spreads normalize? Is it a predictable feature of expiration? It's a predictable. Yes and no. I hate to answer a question that way. It's predictable, but the prediction is it's going to not make sense. You know what I mean? So the answer is yes, it's probably going to be contrarian. The SOQ asterisk, and that's more game time decision when you see how things come out. But on an FOMC day, that muddies the water even more. So it's FOMC day, so we expect vol to stay bid. Whatever the expected move is, doesn't need to make sense, right? Right, first expansion, then compression. Yeah, okay, that makes sense. Yes, if you want to look at it that way, yes. If you want to look at it that way, then we'll give it a yes. Oh yeah, what was I going to show you? I was going to show you guys this. Oh, this isn't going to show anything. Crap. Okay, it just shows at the open. Is this going to show anything? No. Okay. Never mind. So we'll have to do it the old-fashioned way. And we know that this is somewhat off, so let's just use ES as a default. So expected move is 42. And normally, so that's at 9:30. At noon, this would have receded to expected move, maybe cut in half. We're going to see an expected move of roughly the same up until 2 o'clock. So us theta junkies aren't going to get theta. Nuance, it's really not theta that we're looking at. It's Vega, standard Vega is the standard deviation of the expected move divided by time. Um, Time stands still, so to speak, and volatility will stay up because this volatility isn't here because of time. This volatility is here because of event, like earnings vol. And then the volatility is going to come out when the initial statement's going to be released, the unknown is going to become known. There'll be rehedging of deltas, all that kind of stuff. Some algos may or may not take positions. Then we'll pretend to settle in maybe, and then we have the press conference, and then depending on who asks what loaded questions and how he answers it, the algos will have a party, and then we go into Thursday where we have the QILD roll, which I'll be talking about ad nauseum later today and tomorrow. Anyway, it's almost time to open, so I'm going to sign off YouTube and Twitter land. I'll see my folks in my server, and it's FOMC day and VIXPERY day. Maybe you want to take the kids to the park. Okay, take care, everybody.